So you're thinking about buying stocks or stock picking so that you can make the most from the stock market, but there are so many companies and stocks out there, and the question is, how do you get to choose the right stocks to make a lot of money? What do you look for in these stocks or these companies? Now, if that's you, in this video, I'll be talking about 10 things that you should look for in a company before you buy their stock. Now, these 10 things I'll be talking about are not things that I came up with or that I just thought about. These are actually from a very good book, and I'm going to leave a link below in the description or a pinned comment to that book on Amazon. And this book will cost you less than $15, so you should go and get yourself a copy and read the entire thing because there are more than 10 tips or 10 things to look out for. And the book is titled Common Stocks and Uncommon Profits. And Warren Buffett actually read this book. And if you guys don't know who Warren Buffett is, he's a very successful investor. His net worth is currently at around 115 billion with a B. And Warren Buffett had this to say about this book. He said, and I quote, "I sought out Phil Fisher after reading his Common Stocks and Uncommon Profits. A thorough understanding of the business obtained by using Phil's techniques enables one to make intelligent investment commitments." So if Warren Buffett had this to say about this book, I think this is definitely something that you need to get and you need to read if you're interested in investing into stocks and you plan on picking stocks for your investment portfolio. So let's now jump into the 10 things that you need to look out for when buying a stock. And also, before we do that, just a very quick reminder here, if you are new to the channel, my name is Ian, and on this channel, I talk about ways to make money, ways to save your money, how to invest, credit cards, bank accounts, and everything to do with personal finance. So if you like these types of videos, be sure to give the video a thumbs up. I'll really appreciate it. It's 100% free. And also be sure to subscribe with the notifications on, and that way you'll never miss the updates of when I post new videos on this channel. Now, the first thing that you should look out for, or one of the first things, and by the way, these are in no particular order of importance. So the first one is you should ask yourself, does this company have a good profit margin? So for example, if you're thinking about investing into, let's say, Apple, then you want to look at what the profit margin is for the company. How much does it cost them to make all these iPhones and Apple Watches? And how much money are they making every single year? Now, while you're looking for that information, you also want to consider whether this business has either a service or a product where they can, on average, every year increase the prices, and the consumers will either, one, not care that the price is going up, or they'll still want to purchase the service or product just the same. So for example, in this example, if you're looking at Apple and you see that Apple has a gross profit margin of, let's say, 50% or thereabout, you also want to think about the products that Apple is making. Will Apple be able to increase the prices of these products next year and the year after next and the year after that? And how do you think the market will respond to Apple increasing the prices annually? Do you think that people will still buy iPhones and MacBooks and Apple Watches, or will they look for other alternatives? Now, this is just an example, but the main point is you want to know if the company has a good profit margin, and a very good profit margin here should be anything over 30%, and also if they can increase the price of their products and services over time, and if that will still be okay with the consumers. Now, the third thing that you should be looking for or looking at is kind of tied to the first and the second, and this is you should ask yourself, does this company have really good products to keep consistent sales for the foreseeable future? So like in my example before of Apple, and I'll just use Apple for this video as an example. So you can think about the iPhone, right? Is the iPhone a good enough product which will have consistent sales year after year for the foreseeable future? If the answer is yes to that question, then you can move on to the next thing. And if not, then you want to find a company with products that will have consistent sales for years to come. Now, the fourth thing that you should look out for is asking yourself, is this company doing anything to either, one, maintain the good profit margins that they currently have, or are they actively trying to improve their profit margins? So this could include many different things. For example, does a company have a research and development team that is looking at creating better processes that will cost them less money to create the same products? Or are they looking at creating new products that the market is currently looking for? This one is very important. It's like Apple coming out with a new iPhone every year, and they keep adding other products that people want. Now, the fifth thing to look out for is the relationship between the company and the labor force. If you keep on hearing about a particular company and they're always having issues, the employees are always protesting about work conditions or they're not happy, and this company is never trying to fix the issues with the labor force quickly, then that is a red flag. And actually, the less you hear about a company in terms of having issues with its workers, the better it usually is. You definitely don't want to be investing in a company that puts the labor force at risk because of unsafe work conditions, for example, and then they end up getting a bunch of lawsuits because people are getting hurt or people are getting sick, because that will in turn hurt the company's stock and that will hurt your investments. So if they try to keep their employees happy, and if when issues arise they try to fix them very quickly, then that is a very good sign. Now, here's another thing that you can look out for as well. Another question that you can and you should ask yourself is, does this company spend a good amount of money on research and development? So for example, using Apple and as an example again, Apple created the iPhone and then they did research, they did more development. They came out with a second gen, a third gen, a fourth gen. We're now at the iPhone 13, and if they didn't spend the money to do the research and development to create a better iPhone every single year, then they would have lost out on a lot of money and a lot of profits. Now, if the company isn't spending any money or isn't taking research and development seriously, then chances are they won't have new and better products to offer the market in the years to come, and the sales and the profits may eventually start falling off. Now, spending money on research and development isn't the only thing here, because there are some companies that will still spend money on research and development, but they never really come up with anything new. So they have to also be successful with the research and development that they're doing. Now, another important thing to look out for is, does this company have a very good sales team? And are they interested in gathering resources, whether it's people or the correct budget to market their products? So for example, you don't have to buy an iPhone, and there are several different brands of cell phones that you can purchase. And there may even be cell phone brands that have very good phones, but nobody knows about them. And just because you have a good product doesn't mean it's going to sell. If you can't market it, if you can't get a good sales team, then you're going to be stuck with that product no matter how good it is. So if this company isn't spending a lot or isn't trying to acquire the resources or the sales team to push their products and get them sales, then this means that they'll have maybe a good product or service, but they'll have no sales. It'll also make no money, which equals no profits, which is bad for the stock. Now, the next thing to look out for, or one of the next things, is the management of the company. Do they have good management? You want to take a look at the CEO and the CFO. Are these people really good? Do they have a good reputation? Are they making changes in the company to benefit the company and ultimately create more profits for you, the investor? Now, this is actually important because an example here could be, let's say, a family-owned company, and they need to hire a CFO and a CEO, but instead of actually going out there and looking for reputable, qualified people, they just hire Uncle Joe and then Uncle Bob because it's a family-owned business, and Uncle Joe and Uncle Bob really have no vision. They don't really care about making money or moving the company forward, but they're just trying to keep everything in the family, and you definitely don't want to invest in a company that doesn't take at least the top level management seriously and doesn't try to get the best talent and people with the best reputation off getting results. Now, the next thing here to consider is, does this company have a competitive edge? There's a lot of competition, and you want to pick the best companies in any field to invest in. So for example, Coca-Cola is a billion-dollar company. If you got $1 billion right now, would you be able to go out there and create another Coca-Cola? Now, chances are you wouldn't be able to, because Coca-Cola isn't just about selling the drinks. It's also about the brand, there are a lot of other drinks on the market right now. When you go to the soda machine, you have all these other drinks, but yet people know Coca-Cola, and it's so popular because of the brand that they have built. So likewise, you want to invest in companies that definitely have an edge over other companies and over their competitors because of the brand that they have built. Now, the final thing that you want to look out for is, can this company continue to grow in the future without diluting their shares? So is this company going to have to put more shares in the market later on, which makes the value of the shares that you already own less? Instead, you want a company that has enough cash to grow without having to dilute the shares later on, or at least for the foreseeable future. Now, these are just a few things that you should look out for before you pick your stocks. And once again, if you are planning on doing this, I would suggest that you get a copy of that book, linked down below. Book is titled Common Stocks and Uncommon Profits. So be sure to check that out, and also be sure to comment below and let me know what is your process for picking stocks. Tell me what you look at before you pick any stocks. And as always, all the best in making money and your investments, and I'll see you guys very soon in the next one.